Welcome to Drive Your Journey. I'm your host, Fred Arnold. All of us are looking for help. Our guests are going to give you insights and ideas to help you along your journey. And today I'm joined by Dave Cantrell. Dave Cantrell is a mortgage professional in American Family Funding.
Thank
Welcome
you very
to
much.
the show.
Thank you very much. My pleasure. Thanks for having me.
Absolutely. Now, it's a good market right now, right? Lower interest rates?
Interest rates are very low right now. They are historically low. We're talking back in Brexit time. So this is a fantastic market right now for us. It is a great time, and I really don't see interest rates moving up anytime soon. I think that with where the economy is and where interest rates are right now is kind of a good flat area where they want to keep it. Things are going nicely. And then, more importantly, they don't like moving interest rates in an election year. So once we hit towards the end of this year, beginning of the next year, you really probably are not going to see any real big moves unless there's a big catastrophe, something like that. But for the most part, I think they'll probably stay low for quite some time.
And what opportunities does it help others in their journey in life to take advantage of the lower rates?
So right off the bat, it's a great time to buy a home. I mean, when you have interest rates like this, it's really, really inexpensive money. And so, having a 30-year loan at, 3.875 or even 4%, that is fantastic. If you look at, if you just go to Google and you look at interest rates over the last 30 years, it's going to look like a ski slope. And this is where we are right now. And so really just a great time to buy a home right now. And it's really helping people qualify for homes that probably couldn't qualify before because payments are going to be lower, and so now they'll be able to get into homes.
One thing that I've seen is one of the biggest barriers to entry when buying a house is down payment.
Right. Yeah.
And so we have some opportunities in the industry. Low down payment, VA, no money down,
right.
FHA, minimal money down.
Right.
Yeah.
I mean, there's still that feeling out there that people think they have to put 20% down. I talked to a customer the other day saying, I don't have 20% to put down. I'm like, you don't have to have 20% to put down anymore. You can get into a home at very, very low down payments. So,
and the one thing I've noticed, after almost three decades in the business, mortgage insurance rates have gone down. So
correct.
there's very, very minimal mortgage insurance.
Yeah.
Let's talk about those that got locked out of being able to refinance because they didn't have enough equity.
Right.
But values have been going up, so they do now.
Correct. The one of the biggest refinance markets we're seeing right now is people that put 3.5% down, put 4%, 5%, 10% down, through 2 or 3 years ago because interest rates were low. Now the value is there that they have 20% equity in their home. Now you can do a refinance with staying at a low rate but getting rid of the mortgage insurance because now you're at that 20%.
Please, 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 I want to emphasize this. Please be careful when you get ads in the mail. A client brought me about 7, a veteran,
right.
that he got all of a sudden since
right.
he's refinancing, and 2.99. Mm-hmm. But if you read the fine print,
right.
2 points, 40% equity, 750 credit score. It goes on and on and on. It's kind of a Swiss cheese letter is what I call it.
Right.
The truth is buried in the details.
Yeah, absolutely. I mean, when you hear it, I hear people all the time saying, oh, on the radio I hear this, or I get a mail, or my bank says this. It is one of those truly, they're telling you this to get you in the door, right? And then once you're in the door, all of a sudden that rate changes when you, like say you don't have the loan to value or you don't have the credit score or you're not putting enough down. So that's very, very important. On all those mailers, there's those disclosures at the bottom. Take a quick read or call us. Trust me, we can walk you through it and we can show you, whether that's the right situation for you or not.
We're seeing, last topic I want to talk about, we're seeing an equilibrium in the markets.
Yeah.
Buyer-seller market, right?
Yeah,
so a little more, it's not so much a seller, it's kind of a little more equal, except on the lower end.
Right.
I don't want to say lower end homes, but the entry-level homes.
Right. Yeah, I mean, this is real. I'm calling it a transaction market because it's not really a buyer's market and it's not really a seller's market. Seller's market is when where values are through the roof and they can wait and they're going to pick their buyer. Buyer's market is when things are low. This is sellers are pretty happy. They still have a lot. Their homes are still pretty high. Buyers are happy because interest rates are low. So it really is a great market to be for transactions and really getting things done. We're seeing a lot of movement now.
I'm going to share one thing before we cut out, and that is, in this market, people are asking, is there going to be a correction?
Right.
And the one reason why I don't think there will be is once we see rates, values drop a little bit because money's cheap, if you will, those that were blocked out of the home buying process are going to jump right in.
Right.
They're going to get tired of living on their parents' sofa, if you will, right?
Yep.
Or cohabitating or sharing, if you will, with another couple or a friend. they're going to want to get into the market, number one. Number two, it's so expensive to build a new home.
Right.
Because of land, labor, lumber.
Yep.
The three L's, right?
Yes, absolutely.
And now illegal with environmental issues and rules and
Right.
laws. So great time to buy a house. We don't think there is going to be that dip. Most people that qualified for a loan they qualified because they made the money.
Right, because they truly qualified.
Exactly, versus
Correct.
the last.
Yeah.
Anyhow, those that want to reach out to you, Dave, how can they get you?
So my phone number is 661-505-4368. My email address, david@affloans.com.
And I know your manager. If you know anybody at American Family Funding, AFF Loans, look at the loan officer you know
Yep.
and give them a call.
That'd be great.
Absolutely. Thanks, Dave. Appreciate you coming in.
Thank you very much.
Absolutely.